No change. The Federal Reserve maintaining rates in the range of 5.25% to 5.5%, but signaling they will cut rates next year while still keeping the door open for any future rate hikes on the table. Officials see cutting rates by 75 basis points next year, implying 3 rate cuts next year. Breaking that down, 5 officials see 2 cuts next year, 6 see 3 cuts, and 4 see 4 cuts. Looking ahead to 2025, officials anticipate cutting rates 4 more times. These projections coming as the Fed sees inflation dropping to 2.4% next year and then further dropping to 2.2% in 2025. Acknowledging the progress in inflation, officials changed long-time held language in their statement, saying that inflation has, quote, eased over the past year but remains elevated. This from just saying that inflation remains elevated in numerous previous statements. And while officials penciled in 75 basis points of rate hikes next year, they kept a version of language from a prior statement, leaving room for rate hikes on the table, saying that quote, in determining the extent to which any additional policy firming may be appropriate. The change there, adding the word any. The committee is going to take into account the cumulative effects of tightening as well as lag effects and any developments in economic and financial conditions. Officials also acknowledged in their statement the slowdown in the economy since the torrid pace of over 5% in the third quarter. Next year, they see GDP clocking in at 1.4%. The unemployment rate looked to be ticking up to 4.1% next year. This decision was unanimous.